Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look at what has happened yesterday on the session on euro currency. So you can see on the daily chart, yesterday's price action barely has impact on the daily picture, because actually yesterday it was the inside session of our high wave pattern. So the range of the yesterday session stands inside of the range of the Monday session. So you can see, or Tuesday session. So as you can see, this still forming some kind of the consolidation right below the upper border of the triangle. Potentially this is the bullish sign, because when the market shows some tight consolidation right below some significant resistance, it means that the chance on the breakout attempt really starts to rise. Still, the extreme points of our high wave pattern, neither top nor low, has not been broken yet. Daily trend still stands bullish, and currently we still think that chance on upward continuation here exists, because an overall sentiment on the euro currency right now mostly stands bullish, as we have estimated on the weekly chart and the monthly. We have talked about it a considerable period of time already, so a few months probably. But as you can see, this chap is standing inside of this consolidation stance since the December 2017, somewhere since the beginning of the year. You're just calling inside of this range. Although on the daily chart you can see not much changes we have, on the intraday charts we still have some positive shifts. So take a look at the 4-hour time frame chart. On the 4-hour time frame chart, market has confirmed our suggestion that the deeper downward retracement is not good sign for the bulls, and mostly market has confirmed the bullish ambitions, because I recall our discussion in yesterday's video. We said, well, reaching of the COP target is just a minor extension, and one leg retracement should be enough. Although we have discussed the possible A, B, C, D retracement here, but we said that it will be not welcome in the current situation and will break the normal market mechanics of the bullish market, because major retracement already has happened from this level on the BC leg. Here, when the market hits the COP, retracement should not be as deep as it was here. It should be some minor reaction just on the target, and if market indeed stands bullish, it should continue upward action. So here we have two patterns. First is the minor pennant is forming here. It looks even better on the daily chart. So you can see this minor triangle is forming right below the trend line. Another pattern that could be formed is a kind of the wedge pattern. So you can see this some narrowing action is developing, and potentially wedge, of course, signs of weakness on the market. The market is housing the upside potential because it can't support the same pace of the tops to stand at least in the horizon channel. You can see that each top stands a bit lower than the previous ones, and slower pace of the forming of the tops. But not always the wedge pattern becomes a reversal pattern. So sometimes market shows the acceleration through it to the upside. It's also possible. That's why we will keep an eye on the wedge. But I think that's not time yet to be upset, and this market will not go higher. It's a bit early to talk about it. So besides, inside of the wedge we have a lot of room, and probably market will stand there till the end of the week. So today and tomorrow still some action inside of it could happen. So what we could keep an eye on today. Today we will take a look at the hourly chart. First of all, I would like to remind you our head and shoulders pattern that we have discussed. And indeed, as we said, that market should not show the lows deeper than this one. That will keep the pattern valid. Indeed, this has happened. Now, extended pattern that we will be watching on the hourly chart is a kind of the butterfly, right? It has two targets. First one is 24.34, 127 extension. Next one will be 2460. This is destination point of the hand shoulders probably as well. So we will calculate the ABCD pattern based on it. Right, you can see this ABCD target of this hand shoulders 2450, 2460, and also could become the target of this right arm, the shape of the butterfly. So, and today the major question is where the right wing of the butterfly could start. So here, guys, I have some ideas I would like to share with you. So now we do not need the hand shoulders, we need to focus on the right arm. So first of all, take a look that here we have some bearish grabbers. This has been formed recently. It means that these lows should be taken out. But these lows, guys, actually this is the OP target of this A, B, C, top, D pattern. OP. So if grabbers suggest the taking out of the OP and moving lower, it means that the next destination point, this market should move to the next destination point of the same ABCD pattern, right? So correspondingly, it suggests that this action to the upside is just a retracement, it's just a reaction on the reaching of the OP target. That's probably the fib level as well, I suppose. Here I don't have it on the chart, but it seems that here we have also the 50% support of this most recent leg up. But existence of the grabbers suggests that probably these lows could be taken out. To continue this logical sequence, we are coming to the XOP target. At the same time, taking into consideration this larger A, B, C, D bottom pattern points the same destination point. It stands at 2350. So that potentially the level where market could drop. Here we also will get the gutless triple to buy, as you can see on this most recent leg, and that's the point where the upper direction could start. This is the first scenario, but based on the patterns that we have right now in place. I mean these ABCDs, grabbers, so they point on this level. Another scenario exists if market will start upper direction immediately with taking out of this top, erasing of the grabbers and starting to move higher. That also possible, but if this will happen, our target will not be changed because all targets are based on this swing to the downside. It means that the right part of the butterfly will start a bit earlier than we are suggesting right now. As you can see, this is minor, guys, technical details. It's not really has some major impact on the situation. So where this upward action will start, here or here, this doesn't change the picture that we have on the 4-hour time frame chart, the idea of the upward action and so on. This is just a moment where how to take the position if you would like to go long in the current situation. So the different scenarios exist. Usually, in most conservative approach is waiting for completion of this destination point. Second is that some compromise. You could try to take some minor position here, because you could see here a minor hand shoulders is forming on the 15-minute chart right here. You could take, for example, the half of the position. If market will drop here, you will take the rest in this point. Finally, you could apply Jordan Napoli minesweeper tactic. You could wait when the market will turn trend bullish here, confirm this support area and starting upward action, and then trying to take position in minor retracement. So 3 different tactics exist how you could deal with this setup. If you have the bearish view on the current situation, you better to wait the breakout of these lows, because until these lows will hold, the overall bullish context on the 4-hour time frame chart here on the hourly chart with this head and shoulders pattern will be valid. Only if market will break through the confidence and continue move lower, well, this could become important moment that will tell you that probably downward action could be re-established. But while market is keeping all this stuff inside of the high wave pattern, forming this triangle, stands above this 2340 area, this bullish setup will be valid. So that's our view on the euro currency. That's the patterns that you could keep an eye on today and see how situation will turn.